it's a pleasure to have you here. Thank you
me.
for coming. And I have your article, your commentary right in front of me, and it's beautiful. You say true reflections on 2011 and 2012. I'd like to ask you about it because you say the Dow Jones average managed again for the year 2011, but very few investors were cheering. How about 2012? What are your clients telling you, or what are you telling your clients about 2012?
I think probably a slightly calmer year than what we saw in 2011. If you think about what got us to very flat returns, you had up about 10% going into April. Then you had a 20% drop going into the beginning of October. You recovered almost all of that just in the month of October. Then had another 10% drop into December and a 10% rally. So it's no wonder why investors were frustrated. I mean, that's extraordinary swing to end up essentially flat. And the volatility is already starting to come down this year. Correlations are starting to come down. And I think it's a year that will be more attractive to individual investors, which last year certainly wasn't, because it makes them feel like it's just the whole game is rigged against them. And I think this is a more appetizing year for individual investors.
So the volatility was elevated in 2011, as you said, but you expect not to be so elevated. But how about the Eurozone crisis, which contributed to the volatility?
It did. I think a lot of what we're seeing in Europe, though, has already been priced into markets, priced into valuation, and priced into expectations. And what I think is priced in is not an immediate, quick resolution to this crisis, but some of the steps that we have started to see. The long-term repo operations that the European Central Bank just put forth, setting up the ECB almost like a bad bank. That's not an overnight fix, it's not a quick fix, but it may be the start of what is necessary to start to ease some of these pressures, to start to bring yields down. And then there's the economic piece of it. We actually think that there's a case that could be made for not all of Europe going into a recession. I think many of the peripheral economies, frankly, are already in a recession. But there is a case that could be made that some of the bigger economies, like a Germany, like a France, could actually manage to stay out of official recession territory. The euro is weak, that boosts their exports. The US is starting to pick up in terms of growth. That could help to pull Europe along with it. And that's, I think, the untold story right now, that maybe the economic malaise is not quite as dire as what I think a lot of people thought even a few short months ago.
You said about the U.S. economy that the economy is picking up. However, we get reports like the growth rate is revised down to 1.7, and then we have the unemployment report, which wasn't so pleasing to some investors. What do you think?
I think you could poke some holes in the latest jobs report, but for the most part, it was pretty good. We saw job gains across the board, private sector job growth of over 200,000. We'd like to see higher numbers, but over 200,000. It wasn't just concentrated in one area. It was pretty much across the board. There was some nitpicking on the fact that about 40,000 of the jobs were in the transport area and the shipping, so couriers and messengers, probably driven by how much of the holiday retail sales were online. People sitting at home and shopping without having to go out. So I get that, but pretty much across the board, all of the leading indicators for job growth have improved dramatically. Initial unemployment claims, even what you're seeing now in the small business sector in the US, which is a lot different than the story that has been in the last couple of years, where almost all the growth had been concentrated in larger companies. Now we're seeing it in small companies as well. You've seen the manufacturing sector pick up. You're seeing services sector pick up. Holiday sales were stronger than expected. Auto sales have been booming right now. We're even starting to get a sense of bottoming in housing. So we're starting to stack up more than just one or two optimistic trends. This is not to suggest a boom, but much more momentum than I think anybody would have believed in the, say, August, September timeframe, where a second recession was seen as inevitable.
I hear that you're very bullish on the economy. However, some people think that Federal Reserve is going to interfere, or let's say is going to definitely have a $500 billion asset purchases towards the half of the year. Do you agree?
No, and I hope that the Fed doesn't feel compelled to do a third round of quantitative easing. I don't think it's the right thing. I think QE2 was questionable as well, and I think what happened with QE2 was it really caused a huge acceleration in commodity prices, which I actually think was the #1 reason why the U.S. economy was as weak as it was in the first half of 2011, because we saw that surge in commodity prices. And that is acting as an immediate hit or benefit to the economy. Since the Fed lowered short-term interest rates to 0 back at the end of 2008, and they've been pegged at 0 since then, no longer does Fed policy really move the needle much. And I think inflation is the thing that is moving the needle a little bit more. So I hope the Fed just
We'll stay out of it?
yeah, chills out
No
for a little
QE3?
while. No QE3. That's my hope. And I think the strength that we're going to see in the economy, I think will support the Fed not doing anything more at this stage.
What is your take on gold, and what do you see the central bankers doing? They're buying. And
Yeah,
what
I
do you
think
expect?
the recent weakness in gold, you know, we hit close to 1900 back, I think in
Yes.
August was the high, and we actually got down to the low 1500s. So that was a pretty big sell-off in gold. And I think what that represented is a lot of short-term momentum investors taking profits, but also getting out of gold in order to fund purchases of the US dollar, because that became yet again another safe haven play. A lot of what's happening in the European crisis has driven that demand for dollars. And I think a lot of investors simply had to sell where there were profits or sell gold, which in many cases they bought as a currency hedge. So if you now want to buy, or you're in a position to have to buy dollars, you sell the thing you were buying in place of dollars. So I think it appears, at least technically, that a lot of that selling pressure is behind us. That said, I am no expert on gold, so I wouldn't attempt to forecast where it's going. But some of that short-term momentum-based selling appears to be largely over.
Yes. And last question about the BRICS. Jim O'Neill, who is the founder of the BRICS, recently commented that there are new additions like Turkey and Mexico. What is your take on the emerging markets?
You know, we tend to look at the emerging markets broadly. Schwab is on a path toward analyzing country by country, but right now we do it more in a collective way. So we do express an opinion and publish opinions on emerging markets. About a year ago, in November of 2010,
Yes.
we downgraded our assessment of the emerging markets, largely because the inflation problem that was hitting there was hitting much more, it was hitting much harder.
Was Turkey among them, by the way?
You know what? I don't know. You're more of an expert on that. It was pretty much across the board because it was
Yes.
it was food prices most notably. In fact, we have to remember that it was food inflation that really represented the genesis of Arab
That's true.
Spring. I mean, that was really what started it.
In the region.
So and because so many emerging economies, central banks, their one mandate is inflation, and it's commodity inflation too, unlike the Fed, that's just core inflation where they X food and energy out. But most other central banks look at headline inflation. So central banks in the emerging economies were forced to really tighten monetary policy, and that became a really big headwind for the emerging markets. And I think one of the reasons why they underperformed as much as they did, and why you saw China down over 25% last year. But that has turned.
Yeah, how about
Inflation has
2012?
receded,
Yes.
and now we've got central banks starting to ease. So
Okay.
we have very much warmed back up to emerging markets, and think in the context of an equity portfolio that you want to make sure you have up to your normal allocation in emerging markets, but also in U.S. markets. And I think in terms of ranking things, and we're not forecasters, I think the U.S. will still be the best performer, but I think emerging markets probably comes in second this year with some of the non-U.S. developed markets further down the list.
So positive outlook for the emerging
Positive-
markets too.
positive
Thank you
outlook,
very
yeah.
much.
Thank you.
Thank you for
Thanks.
coming.